Welcome to Before the Bell, your home for actionable pre-market content. My name is Chris Buss with Traders Profit Compass. It is 6:44 as I'm starting the video. And as always, please run the video at 1.5x for maximum efficiency. Okay, taking a quick look at pre-market. Large caps and small caps are down about 1%. NASDAQ down about 1.5%. Bitcoin off 2%. Oil is up 0.6. Gold and silver are marginally red, but not a lot. On the macro front, we've got the Case-Shiller Index, Housing Index. We've got a 5-year bond auction at 1 o'clock. But the big thing is the FOMC rate announcement tomorrow at 2 p.m. And today on the blog post, I'm going to post quite a number of little slides and market graphics tied into the FOMC announcement that I think you would find interesting. So please take a look at the blog site. And actually, while the blog site's on my mind, if you're new to the channel, welcome. What you're going to find here is a detailed technical analysis of the broad market indexes and the FATMAAN names, the market leading mega caps, with actionable levels for you to work your execution around. If you go over to the show notes, you'll find a link to the blog site where you can drop in your email address, join the team. That way you'll get all my content delivered morning, noon, or night right to your email box. And that way you won't have to hunt for it. And so that'll take you right to the blog site. And then you can jump over to the blog and look at each day's postings. So on the earnings front, we got J&J this morning, along with GE, Verizon, a bunch of other names. You'll find an earnings calendar on the blog site as well. Really, this afternoon, all eyes are going to be focused on Microsoft that reports. And also, I'm going to keep my eye on Texas Instruments and the semiconductor sector. So, lot of stuff to go over today. So let's dive right into it. Yesterday, we talked about this band of resistance here at 29 to 30. We had a big move up all the way almost to 40. Really, it looked like a blow-off top in volatility. That is very hard to maintain. In fact, you got to go back to coronavirus to find volatility up in this regime. What we said yesterday, look for that high and then look for a fading VIX on your dashboard to give you confidence that the trend was reversing. And actually we got that. We had a midday high, 11 o'clock, something like that, maybe 10:30. But that morning selling really pushed that up. And then we had a falling VIX, and actually we were up a point, but basically almost closing on the lows. So now what I would be looking for today, now you see that we're red on the futures. So what you might see is a bump up in vol, but what you're hoping for is to get a red candle where we actually start coming back down below this resistance level, get something into the 29s. That would give us a lot of confidence that, they're just not going to reverse the thing of yesterday. So that's what I would be looking for on the VIX. Now, we've been really focused on these NYMO and NAMO oscillators, and we were setting up for what I consider a high probability trade, and that is, well, certainly when you're stretched to the downside, you don't want to be sitting in shorts, that's for sure. Whether you caught the bottom of the bounce or participated yesterday, those are bonuses. But what you don't want to do is either short into the hole, which is, putting on a new short after the majority of the move is already over, or holding on to your shorts, trying to milk that last little bit out. Now, if you're a sharpshooter and you're watching every tick and you were short, okay, most people aren't like that. So the higher probability trade was to look for a reversal. Now, you can tell on NAMO, this is the NASDAQ oscillator. We did get a little bounce, but hey, we're still way down at the bottom. This is not a time to be, thinking anything other than looking for a follow through on a tradable bounce. Now, what I want to do is jump over to the NAMO just to show you what that looks like. Let me go back one. Yeah, here. We're down at minus 90. Now we're down at minus 80. Still way stretched to the downside. So like I said, what we're looking for is follow through to the upside on this bounce. We'll see if we can get it. Now, looking at the index charts, starting with SPY, I've entitled today's video as Hammer Time, and we got that classic hammer look where you've got a big plunge that is bought up, and this is your classic hammer type candle. And if you go back to yesterday's video, if you care to do that, if you're new to the channel or just want to review it, this is exactly what we were looking for yesterday. I couldn't have been more pleased with kind of the setup and the guidance yesterday. We were looking for a move down, a flush capitulation move that is got everybody out, got everybody panicked, and then they start buying it up. And so just from a trading perspective, as price recovered these levels on the way back up, those were your buy points for active traders. Now, for swing traders, it's really simple. You're just keying off the 200, and you've got that level right here at 436.62. Or excuse me, 436.62. Call it 436.50. We took that out. So today, even though we're red, what you want to see is that 200 recovered, and then we can look for that bounce. Now, I just want to throw out there a couple little things. We've got the FOMC in front of us. That may throttle what you'd normally see today, which I think would be a nice, healthy green candle on the bounce. I think the FOMC, just because of the importance of what they may or may not say tomorrow, is going to keep a decent number of people on the sidelines until that event risk clears tomorrow afternoon. So we may go into, we may have a slightly red day, we may have a slightly green day, or we might just oscillate around the zero line as that natural hesitation happens before a big potentially market moving event. So keep that in your narrative today, and I wouldn't get too frustrated if, oh my God, we're a little bit red, or too gonzo if we're a little bit green, because tomorrow's a total wild card. There's no way to play it. Can you imagine if he comes out and says, we got to get this inflation under control, so we're going to start with 50 basis points. You'd see a giant red bar, within 5 seconds. the algos would see that, and that would be it. He may say, just like we planned, and then it'll be what it'll be. Whatever. All I'm saying is there's real event risk there, and you've got to take that into consideration of how you want to be positioned tomorrow heading into that event. So here on the 2 hour, here was the capitulation low that was bought up, and then we move up through the levels into the gap, above the gap, and above the 200. Lots of nice buying opportunities there. And you can see what I've done here, as we discussed yesterday, is I've put on the Fibonacci's in brown. You can see here we're up to a 38% retrace of this down move. So now what you're looking for going forward is alignment between technical resistance and your Fibonacci's. I think the next little zone is between 445 and 447. You can see that here where you've got some technical resistance at 445, and then you've got the halfback short right here at 446.74. Call it 447. And so if you're long, you just get your guard up. You don't take it off, right when you come into 445, unless you see some type of stall, reversal, something like that, that would give you an indication that, at least for now, there's going to be a reversal. So I think the major level, to be quite honest, is 450. That's going to be a big, big level of resistance on SPY. Why? Because it was this big trading range. It's hard to see here, but we had a trading range from 470 down to 450. We went through that like it was nothing, no bounce at all. So now when we come back up, that's going to be a tough spot to overcome on any kind of a bounce. So let's go on to the the NASDAQ daily. Again, you see that nice hammer formation, flush, capitulation low, and then they start buying it up, buy points along the way, still way below the 200. And I think for longer term traders, anything below the 200, you've got to be kind of anticipating downside. It's still in a bearish posture, and to view this bounce as not, the bounce, not the all-in bounce, but a technical oversold rally that base case you're anticipating it to fail, and that's what I'm basing my judgment, my analysis on, is that oversold conditions, oversold bounce that's going to come up into resistance at some point and then roll over and fail. You've got a nice level here at 363.50 at the 200 where you would get a significant amount of resistance. And honestly, if price were to take that out, I think what you'd see is a move up into 380 to fill this gap. Let's look at it on the 2 hour chart. You can see it here. Take out the 200, move up towards this gap here, fill it, not in a straight line. I mean, you may get some little reactions along the way. That would be normal. But then if you got a rally into 380, I would definitely be looking to fade that Why? It's just it's a big, big place of technical resistance. You'd be up here in the midst of the fib zones. 618 retracement of the whole move. That's a typical place for price to fail. Get that gap filled. Check that off the list. Breakdown, back test, and fail. Very common technical move, and that's what I'd be looking for on the cues. Very much the same thing here on IWM. Not quite the hammer look. We didn't have as deep a plunge, but it was more oversold than the other indexes as well. So, but being that as it may, you got from low to high. Let's just say the low was 191. Yeah, low 191 and high was 202. That's an $11 move on the bounce, and that was quite good. And here again, what I would be looking for, and it lines up really well, is a bounce that comes into 210 and fails, because this is 1 year resistance. Everybody up here, you can view that as a huge amount of supply. So price bounces into that level, gives you a nice 50% fib retracement, short entry halfback right there at 210. And hey, if you get stopped out and it goes up to, fill this gap and then comes back down below 210, really all the better technically. So let's take a look at the 2 hour. Lots of chances to get long yesterday. I hope, all told, there were a ton of opportunities yesterday. I hope you participated at a level that made you happy, that made you proud, that made you some money, because it was all there. This is just one example. We had this gap, this prior gap that was there. We went down below it. Your first buy was basically at 195. Your next buy was 197.50, and then you were off to the races. So going back to our trading mindset, I don't think anyone can be expected, and it's not even the goal, to quote tag the bottom. That's something for Twitter. That's something to, I got the bottom kind of thing. You don't have to get the bottom. All you have to do is have a game plan in the morning that if we go down and we start to reverse, I am buying the level, the first recaptured level on IWM. And that first recaptured level was back into the gap. Okay. Damn it, I missed it. I went to get a cup of coffee, and sure enough, that's when the market moves. Blah, blah, blah. Sad song. No. Where's the next opportunity? The next opportunity is taking out the top of the gap at 197.50. If you got that, you got at least, you got almost a $4 move. You got 197.50 up into 202. So you got a 350 move. So that ain't all bad in and of itself. So today I would use this 202 as your pivot. And if you got if they bring it down and you come into 197.50, I'd be a buyer there. I'd be a buyer there with a stop below. Get that little morning selling right into a known level that holds, then get long. Facebook daily. Again, perfect setup Perfect analysis, perfect opportunity. Washout candle comes up, reclaims 300, reclaims 305, and there you are, top to bottom, 289 to 309, $10. Now, you probably didn't get this down here, but a recapture of 300 was certainly objective. If you bought 300, you got a $9 move. You got half of it. Instead of 289 to 309, you got 300 to 309. So that's a $10 move. So let's look at the 60-minute chart real quick. What would I be looking for? You're going to encounter some resistance at 316 right here at this low. If it can get through that, then 320 and then 324. We still got a little gap to fill up here, but I think the rally would be starting to run out of gas when you got into 320 through 324, and 324 has been a really important line on this chart going way back when. Apple, very nice technical action yet again. Why? We came right down through this support zone, tagged our intermediate trend line, and reversed. Let's look at the 60-minute chart. We'll see it really clearly. We had this gap. We had the flush move. When could you have bought it? You could have bought it at 157. You could have bought it at 169. You could have bought it at 160. And it came right up to fill the gap, going from, it was down. It ended up pulling back a little bit, 0.5%. But it had gone all the way from red, all the way back to even, filled the morning gap. So lots of opportunities to buy on the way up. What would I be looking at today? I'd be using this top of the gap, 162.80, 163 as your pivot, with first resistance at 166, and then second resistance up at 168.50 and the 50 EMA. Now remember, just going back to the daily for a second. Now that we're below the 50, that's going to be a very key level for the bulls to recapture. And if that were to happen, then you want to be long on the other side of that. So we could come up here, 167.50, 168, get rejected at the 50, or reclaim it for a stronger bounce. So that 50 is going to be really, really important going forward for Apple. And really any stock that you're trading, if you find yourself below the 50 and then that 50 is recaptured, generally speaking, you want to be long on the north side of the 50. That's always an important level to reclaim. Here on Tesla, our trading tenants held up again. What do I mean by that? First touch of the 200 usually holds. And here we had a perfect tag of that. We came right into a support level at 860, let's call it. And then we got the big bounce higher. Let's look at it on a 60-minute chart. Here was that 860 level. And I think he even made mention of it in the trading room that we had 4 candles, 4 hours, where the bears could not break it, where there were responsive buyers. And as we've said a million times, if you've been with me for that long. Whenever you see multiple candles where bears cannot break through, it's an objective place to get long with a stop below. Make the bears prove it. Here they couldn't, so that was a buying opportunity. 900 as well, and then the move into the gap. What I'd be looking for today was a move to fill the gap and move higher. So that's going to be your pivot point right around 940, and then you've got all the broken levels from above that need to be recaptured. And if and when they do that, those are objective buying points. Microsoft, wow. I mean, we talked about it yesterday. Such a good trading vehicle lately. $20 move off of the lows. We had a low of 276 and we had a high of 297. So, I mean, 20 bucks. And the nice thing about yesterday was you didn't have to get the low to do really, really well. Here was the big hammer candle, moved down, recaptured 280, recaptured 287.50, recaptured the 200. That's an impressive candle. So today, simple trade. Use the 200 as your pivot. Let's look on the 60-minute chart just for fun. Big move lower. We had some levels in here. We had the gap. Lots of levels. I dropped in the fibs. Your first area of resistance is going to be around 302, 303. We do have downtrend resistance on the 60-minute chart. If you had been long and we break out above 302, I would certainly be rolling up your strikes to make sure you bank whatever you made. And then another good place to get long is taking out the downtrend resistance line here. And then you can see the subsequent levels of overhead resistance along the way. Amazon's move doesn't look dramatic, but it was 200 off of the lows. Probably a harder trade to take just because I didn't have all these, after this thing had broken down, I didn't have all these levels dropped in for you. But still, with the rest of Fat Man bouncing and the market bouncing, it was there, especially if you're trading off of a 5, 15, 30-minute chart. But keep the big picture in mind. Very bearish posture under everything. What I mean by everything, we dropped out of a $600 wide consolidation range. We've got the full bear look on the EMAs. We got the 20 below the 50, the 8 below the 20, and the 200 on top. So that's a full bear look. I would not even be thinking about strategic longs at all until 29.50 could be taken out. And even then, you get a bounce into 3,200 up here into a major EMA. I'd be looking for that to fail most definitely. Google, perfect drop down to 2,500. We got the bounce there. Moved back into the gap to fill it, and then right into the 200 where it stopped on a dime. I'd use the 200 today at 26.25 as your pivot, and then you're going to have a big layer of resistance right here at between 26.75 and 2700 where this prior low was. these lows here, and you've got a big area of volume over price resistance right there at 2,700. And notice where the 50% halfback comes in. It's right in that area as well. So that'll be another area of resistance. Netflix is totally blown out. Big drop down. I did not think there was a whole lot more to give here. Certainly not for any kind of swing trade. It did come down in reverse. So now today, if you were interested in trading it right here above 385, if you can hold that pivot level, you're open to 410. And then certainly I would have 410 alarmed. Why? Because you got a $100 gap to fill. And if there's some kind of rally, either broad market or even Netflix specifically, you want to be involved in a potential $100 move. So have that alarmed. Semiconductors, perfect. I mean, what can I tell you? This is why I draw the lines, guys. It's not for fun. It's, it's not a hobby. It's, how I make a living. And if you can get these levels right, and for you that are new or either new to technical analysis or new to the channel, these levels can really help you have confidence so that you can place your effort on execution. Let's look at the chart. Excuse me. Flush move. Drop below the 200. Filled our little gap and came right down to the top of the prior trading range here at 256, where it found support. If you were Johnny on the spot and either had levels alarmed or were watching it closely, beautiful place to buy, not only here at the top of the range, but at the top of this gap. Then you got the big move higher as they bought it back up. You had an entry, even if you missed all this, you had an entry as it recaptured the bottom of the gap. You had an entry as it broke above the top of the gap, and you had an entry on the recapture of the 200, and even that was good for, let's see, it was 269 and closed at 275. So even if you only caught a third of the move, that's $6. And so that was a great trade, even though you probably would have been disappointed that you didn't catch more of it. But things to put in your memory bank and things to put in your trade recap of things you may have missed or things you may have got. And then you can carry that experience forward in the new trade opportunities that present themselves. Now, here's the fibs that I've dropped in on the 60-minute chart from the swing high to the swing low. Here you can see the levels that were recaptured. We took out this downtrend line on the 60-minute chart. So today, you could use 475 as your pivot. What I've done is just make it at the top of the gap. You could also make it at the 200, which I forgot to see what that was. The 200 is at 269. more or less at the bottom of the gap down here. What you may see today is a back touch of the 200. I think that would make technical sense. If you get a back touch of the 200, I would take that long. And just notice where the fibs are. You got a 38% here at, let's call it 279. You've got a big level here at the halfback, right up here at 287.50, right here at this prior low. And then you got the 618 at 292.50. And then you got the 50 above. What I would be looking for here, I'm just reiterating the general case, looking for a move, a bounce back in to resistance that fails. So, breakdown, back test, fail. That's what I'm looking for, but staying very flexible and open. Maybe Powell comes out tomorrow and says something, very dovish. I don't think that's the base case. It's just like what I said before, or more hawkish. So I'm not expecting a dovish statement. But as I always say, it doesn't matter what they say. It's how the market reacts. If the market reacts hugely positive and you get a big, a multi-day rally into these upper resistance zones, I would be looking for the first signs of weakness to get back into short positions, because I don't think this move is over, and I think we're heading lower before we get the ultimate kind of tradable bottom where we can stay long for weeks, if not months. But I don't think we're there yet. I think we're going to get this relief rally, get the oscillators relaxed, get everybody feeling good again about the bounce, and then they come back again. So that's the game plan. I hope you found yesterday very, very helpful. That's what it's all about. If you made some money yesterday, find the place on top of the blog where you can make a modest donation to Traders Profit Compass. Help me stay motivated. Help me keep the lights on. I'd really, really appreciate that. I really look forward to doing these each day, doing what I can to help you, and I hope the information is helping you make some money, helping you learn not only technical analysis, but some ideas about trading this market. And I'm doing the best that I can. Leave me a note in the comment section of the YouTube. Is there an issue, a name you want me to cover off? Is there a sector that you'd like me to review? Anything at all, some constructive feedback on what I can do better, information you'd like to see, that would be great. I'd be happy and actually thrilled to do a user request and help you get the information that you want on the channel and on the blog site. So let's wrap it up there. Hope you guys have a great day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.